Hey everybody, good weekend. Here is your market minute for Sunday, the 3rd of December. In today's market minute, what I want to talk about is the three things that I'm noticing about this market, which are going to affect our short-term trading opportunities. And number one is that we are reconfirming the uptrend. So we had this big uptrend into the beginning of 2023, and we dropped into the correction during the summer. And now what we've seen is the price has now taken out those former highs from July, which means that the uptrend is now confirmed again. So this is rule number one of fractal energy trading. Larger time frames dominate the trend, and we're seeing this come back into play. Now, there was some risk this fall that we were going to pile into a lower high, and this was going to lead into some selling. And this was certainly the narrative that you saw across social media, was that the market is heading for new lows again. But in the month of November, the market has absolutely taken that fear and has mercilessly squeezed all the shorts out to the upside on the narrative that the Fed is close to being done. And so we can see this happening on not only the NASDAQ, which was the previous chart, but also the Dow. You can see how the Dow now has printed a new high after July. So we're back into the uptrend polarity again, not only on the NASDAQ, the Dow, but also the S&P as well too. Friday gave us a new closing high for the year on the S&P 500 cash index. And that brings up item number two, as I go back to the Dow here, is that we're seeing rotation out of tech and into other sectors. So in this case, we saw rotation back into large caps this week, as well as, and this was the big surprise, we saw a lot of rotation into small caps on Friday as we broke from this consolidation pattern back above the 200-day moving average. This is turning out to be an unbelievably big potential for a bear trap back up to the upside. Now, the number three thing that I'm seeing, and we're going to go back to the S&P 500 for this on the daily chart on the right-hand side, is that we're not seeing any pullbacks. When markets go into range expansion like this, which is what we saw in early November, late October, then there's three ways that they can deal with that exhaustion. They can go sideways, they can pull back, or they can continue to grind higher. And the continue to grind higher is what we're seeing now. We're not seeing any pullbacks, and we're not even seeing really much of a sideways move at all these days. And I only see that in the very most bullish market. So when everybody is sitting there waiting for a pullback and not getting one, this is where we get the market running away. And this is typically what we see when fund managers are behind for the year and they're being forced to hold their nose and jump into the waters at this point. They have no choice. They're underinvested right now, and they've got to jump on board for the last few weeks if they want to get their bonus for the year. So what does this mean to us as retail traders? Well, we might not be getting the pullbacks that we expect. So if you're waiting for the next pullback, then you may be left at the altar as the price continues to grind higher. Now, I don't know how long this will happen. Typically, the technicals are not much use when the market's in this type of mode. You might see some momentum indicators like the RSI or MACD showing some divergence before we start to see the price pull back. Again, we don't know when or if this is going to pull back. We've seen scenarios like this happen in 2017 and to early 2018. We've also seen this back in 2013 as well too, with these types of rallies. And they typically do not offer many pullbacks, many ways on board. So sometimes just jumping on board is the only way that you can take these things long. So those are the three things I'm seeing in today's market, and that is your weekend market minute. Thanks for listening. We'll see you in the next one.